Hey traders, hopefully everyone is having a good day and had a good weekend. We're going to be starting off this video with a global macro update. We're going to be looking at the S&P, but also we actually are going to be looking at gold and silver, as well as the gold and silver ratio, the US dollar, things that we haven't really looked at recently compared to, I guess, the US dollar we look at very often, BTC, Ethereum we look at very often, and we will get into those a little bit later in the video. This may be a little bit longer than, I guess, like one of those 15-20 minute videos that we sometimes do, but hey, sometimes it's good to have the extended version to really be able to analyze the different assets that we look at in order to actually have a good understanding of the broader global macro environment, because in our type of trading, we do really value that and try to understand what the global market sentiment is before we really dive in and look at specific trades. So let's start off with the S&P 500. We've been talking about those head and shoulders that got invalidated with a break above the right shoulder, and we had an impulsive move breaking above this major level of significance. We're going to get some level of correction, some market breadth, and that's what we're seeing right here with the descending wedge in our opinion. This is the 6 hour chart. This is the previous all-time high, the head of the head and shoulders. So I'm sure that there was a lot of short sellers that came in after the break of the $3,300 zone when we tested that low for the second time. The bulls were able to hold it, pick it back up, break the previous high, create a new market structure with a series of higher highs and higher lows. And then once it broke that right shoulder, it really kind of took a rocket ship almost to the all-time high. Slight pullback, and I think we're going to be making that next leg up, in my personal opinion, breaking out of this descending wedge formation. So let's just take it down to a smaller time frame and try to understand what we're looking for this price action structure. So for this descending level of support, we could have a potential horizontal level because we see that there was some hesitation to move lower there, second one right there. So if we're able to hold this zone, it could be a horizontal level of support, and that would be creating a descending triangle formation, which is still a valid continuation pattern. But in this overall, I think, direction and overall flow, I think it wouldn't be too hard to see something like this, and then a slow recovery creating a nice squeeze here, and then you're able to get a break. And once you see that first impulsive push that's breaking the consolidation, then you'd be looking for a potential opportunity to enter on a higher low or a break of a high, whatever you like to enter for in terms of the structure or how you like to enter the market. That is completely up to you. But in terms of the structure, I do think this is a strong impulsive move. We're going to get a correction, and we see pushes and exhaustive moves trying to push the price lower, but around 3,400 right now for the S&P is a pretty strong level, and mainly I'm looking for the right shoulder to hold. So we do have a little bit of space, we can see right here. I don't mind if it goes down a little bit lower, but that's the overall structure I'm looking at, is a potential squeeze between this series of well-respected lower highs and this right shoulder support. And then I think that's going to be the corrective move, and we're going to get another impulsive move, and we're just looking for that initial break, which I think is going to be somewhat easy to understand because it's just so well respected at this descending zone that we're going to be looking for a break and retest of, let's say, if it goes like this and creates another double top similar to what we had right here, then you'd be looking for a support bounce of that previous double top. If we don't get that, if we just get a straight line shot like this, we may be looking for this double top to break and hold as a new level of support before we get our next impulsive push to the upside. So that's going to be the S&P, and that's what we're going to be looking for in the risk-on environment that we currently see. So let's now look at the dollar, which I think is going to be pretty important as an asset to just be looking at overall. Quickly looking at the weekly chart, let's just take that away. We know that we had a massive push to the downside, breaking our major level of significance, which is around here. We've been holding it since late 2018, and we had a nice retest of that zone. We can see that right here. Major rejection with a move to the upside, instant push back down. We can see that right here. We will get into that within the smaller time frames. And then we can see this previous resistance is now acting yet again as the same level of sensitivity that we did see prior. And then if we look back in the previous time frames of this zone here, we see that there is supports all along this zone. So this is a major level of significance. So we do expect some level of support because we saw it in the past. We can see that right here. We can see if we go to a smaller time frame, support, break, retest, and then support, and then break, retest, and then move to the downside. So around 93, 92.5 is going to be a strong level of demand that we have seen prove to be a point where buyers are going to be located. So we don't want to assume that it's guaranteed to go down, because right now, let's draw. This is a level of support, this low right here. This was a previous resistance, so we were channeling within this zone. But when we saw a break, that was a potential break for a descending zone, not perfect ascending zone squeeze where you're going to get a potential reversal. But what did we see? We saw the price break out of this major level of resistance, but we saw it come right back in. The sellers were saying, nope, I don't want to move up higher. I want to still push the price down, breaking below this level of resistance and trading beneath it. So now, in my opinion, we're still retesting this previous resistance, and the overall momentum is still to the downside. The fact that we came right back into the channel definitely suggests that the sellers are still in control of the market for the US dollar. So my overall direction and bias is going to be to the downside. Now we do see this low, higher low, higher low. If we connect that, that did get broken, and then we see it was a retest right here. Let's just get an actual trend line in, because obviously that's going to be much straighter than what I can draw. So we can see when we actually draw in the trend line, that's not the one I'm looking for. We see the low, the higher low, the higher low, and then the retest of the previous resistance, or previous support, sorry, turning into a new level of resistance. So there's going to be quite a bit of sell pressure at the current level we see right now, and the overall bias is going to be to the downside. This retest coincided very well with the pullback within the SPX, where we're looking for that descending wedge formation, and we're looking for the first impulsive push, break and retest. And once you see the break above the first major impulsive push, you could be looking to enter. You could be seeing a minor descending wedge or a descending triangle here. We don't exactly know what you're looking for. Continuation patterns after the first impulsive push, giving you confirmations of a descending wedge. And that's going to be the S&P. Whereas what we're talking about within this chart, you want to see to the downside if the S&P is breaking to the upside, because they're very negatively correlated. So that's going to be what we're going to be looking for the SPX as well as the DXY within the next couple, or at least this week for sure, because we are looking at the 12-hour chart. Overall direction is going to be to the downside. Bias is bearish for sure for the US dollar, and for the SPX and other risk on assets, it's going to be bullish, meaning we will wait. I don't think that entering here would pretty much be a good idea in my opinion, because I'd rather wait for the confirmation that we are now in a new bullish trend. I'd rather wait for the break of the resistance as well as a major level of significance horizontally, where there's going to be a level of confluence that I have a pretty strong validation that there is a new market trend that's currently taking place. So I like to see validations, not just descending, but also horizontal, and you get a level of confluence. Once you see a break and retest of that confluence and a strong impulsive push breaking that previous high, that's a really good opportunity to potentially look for some momentum opportunities to capture longs, especially in this current market environment, in my personal opinion. So that's going to be the S&P. NASDAQ is pulling back to its reverse head and shoulders support zone, which was a previous resistance at around 11.6K. The VIX is still consolidating. If it starts to break above 30.5, definitely would be hesitant to be looking at any risk on assets, because if the VIX is really booming up, you don't want to be looking at risk on assets like Bitcoin, Ethereum, SPX, NASDAQ. Really any of those, even gold and silver, really. And they're also 2000 still barely holding on to that previous high there. So let's now look at gold and silver. So that was the DXY, the US dollar index. We're now going to be looking at gold first, and then we're going to be looking at silver. So let's first take it down all the way to the weekly chart and understand where we are. This is the previous high back in 2011. We are now retesting that zone, holding it as a nice new level of support. We are contracting in volatility where we're seeing a key level of support hold at around 1860, and we're seeing a series of lower highs squeeze the price between a descending zone and a horizontal zone. The price has to pick a direction. It can't stop. Time is always going forward, so obviously it has to pick a direction, either to the upside, breaking the confidence of the sellers, or to the downside, breaking the confidence of the buyers. In my personal opinion, I think the overall momentum is going to go to the upside, so I think that this descending zone is going to break, but like I said before, we always like to look for confirmation. So that's currently where we are within the, I would say, larger time frame and the larger kind of perspective. In terms of the smaller perspective, we do see a blow off top. We see this in a lot of markets where it trends up, big boom, and then you see the consolidation that you can look for your continuation patterns. And this does happen pretty often. So this is a blow off top, and you see the first potential continuation pattern fail. This is a symmetrical triangle right here. Move to the downside, broke the triangle to the downside. Definitely not looking for shorts anymore. At this point, once it breaks, such a strong level, you could be looking for day trades, but that's not really what we're looking for. We're looking to continue the overall trend. So this is an exhaustive move, a pullback, a overall market breadth, and we see that it was able to hold this previous major low. When we look on smaller time frames, there's a level of significance there as well, around 1860. Once we were able to hold that zone, we did not actually test that low. We created a higher low, and now we're creating a higher low right here, as well as a series of higher highs. So overall, the new short-term market trend is slightly to the upside, but we do have to understand the larger market, which is a descending triangle formation. So it could have another little spill, because if we're looking at it in a different way, let's just take all of this stuff off. This could be a little wedge or a little bear flag, which could dump you down, test these lows again, and then once you recover, you can get that nice squeeze where you get that symmetrical triangle, you get a break to the upside, and then you're looking for that nice strong momentum to kick in again. So that's going to be the overall bias for gold. I don't want to be too early. I don't need to be the first one in. There's a major level of significance at around 1910. So we're looking to break the $1,900 zone before we look for any potential buys. And this is our confluence zone, which is a series of lower highs as well as the horizontal zone of significance we see all throughout this price action pattern. You want to be breaking this zone. You want to be breaking this zone before you get the pullback or confirmation. Once you get the confirmation with the type A or type B candle closure, you're going to be looking for opportunities for this metal, or I am at least. So going to be patient on that one. We've been really patient with this triangle setup. We've been just waiting and waiting, but at a certain time there is a point where I think it will break, and we'll be definitely on the lookout for opportunities. So very similar situation for silver. We had a triangle right here. Did not work out. Pretty aggressive push to the downside. We were able to hold that previous level of support like we did on gold. We are seeing very similar a bear flag here, which is an optimal, so we could get a little spill back down to this level of support. We've been holding it since around mid-July. So what we could be seeing is a descending triangle formation where you get this high, lower high, lower high. We might get one more lower high like this. And then we might get a spill holding this support yet again, and then contract. And then once you get the first impulsive push, you're looking for either the $25 range or maybe a lower high that we are able to identify on a smaller time frame when you are getting further into the triangle. But overall, I do think that this contraction is looking very well respected, and we're looking to see this $22.50, $22.40 range hold as a level of support, and you're looking for that next strong impulsive push to break you out of the overall contraction. So that's going to be my view on the asset of gold and silver. Very simple thing to explain on the gold and silver ratio. We're just seeing a consolidation below a major level of previous level of support, which is going to be a new level of resistance. We see a massive wick to the upside, which is indicating sell pressure, keeping the price below a certain zone on a major time frame, which is a weekly. And then we see a potential another validation of this zone, but Overall, this was a major level of significance all throughout 2016, 2017, 2018, 2019. We see major levels, so the fact that we're now retesting it, I think it's a good thing, and the overall momentum is going to continue to the downside, which means silver is going to be appreciating at a greater rate compared to gold. Doesn't mean I'm bearish on gold. I'm bullish on gold for sure, but I am more bullish on silver than gold because it's a metals bull market. So that's going to be my analysis for those assets there. I'll just keep gold on the lookout. Now on to BTC, Ethereum, as well as ChainLink. So to be completely honest, I think that BTC is looking absolutely phenomenal. We've been talking about it since it broke out of this zone. If you haven't taken positions in already, I think it's still a really good opportunity. I think there's still a lot to go. But yeah, we've been bullish since the start of the expansion right here. And once it retested this zone, the 11.2K zone, at that point, we just said this is really looking really bullish. We're seeing a nice contraction. We're seeing a nice descending zone, horizontal level of support, obvious descending triangle formation, and it looks like it's now breaking to the upside, breaking the previous high. So if we're looking for targets, we do see around 13.3 be a potential area of significance for target. Why do we say so? If we're just looking at the geometry of this structure, we can see from the breakout, give or take a couple $100, 13.3, 13.2, somewhere around there. That's a good opportunity for a first potential TP if you were able to get an entry at around 11.2, I think. That's a pretty significant move to the upside with some very solid risk reward parameters, 17%, and if your stop loss was below the previous low, you're looking at like 4%, 3.5, 4%, somewhere around there. So very obvious risk rewards that, in my opinion, are worth it. And not much more to say. The next level of retest for a potential short-term entry where you're looking for shorter-term time frames, in my opinion, would probably be this series of highs right here, where it's around 12.2. Doesn't seem like much, but this move to this move would be very significant. And I think in most trending markets, it trends higher and higher to somewhat of a blow off top. So it could actually blow off top to above this zone to 1400. Very well could just continue going up and up and up. Obviously, no one has a crystal ball. But in terms of the next potential zone, I think this breakout is going to be looking something like this. And then we're going to get our next potential consolidation, some squeeze, something like this. And then you're going to be looking for something like this, and then a major break to the upside there. So if we take it down to, let's say, the daily, I think that's a very I would say doable overall move for BTC. We've seen BTC rise higher, obviously, in previous historic time frames. We can see all throughout 2017 massive pushes to the upside. So I think that this slow consolidation is finally over, and we're now going to see the next big move here for BTC. There's going to be a lot more potential hype and a lot more interest in alts because as the bull market slowly comes together, I think more and more people are going to be interested in alts because there's more speculation. You can make more money. A lot of people don't like BTC because there's no team or development organization that says we are BTC. It's a community, but there's no CEO, there's no corporation, there's no company, and people love it for it. But then also, if you're like coming from the stock world, it's pretty hard to do due diligence on something that doesn't have a face, a name, or anything along the lines of that. So in terms of people who are coming from more like the institutional side of things, I think BTC is a good option, but they might look at some corporations that are using blockchain as well. So anyways, it's a little off topic. That's basically going to be my discussion on BTC. Overall, I'm bullish on it. We're looking for continuation setups. If you have not already put on the long trade that I think is going to be doing pretty well in my personal opinion. So that's going to be BTC. We're not going to get too deep into it. Very, very simple TA. Overall, I think that it's a very bullish chart no matter what time frame you look at it. to be completely honest. You can look at it from the monthly all the way to like the 15-minute, even 5-minute chart. It looks bullish. So there's no reason for me to look for anything other than longs within the entire cryptocurrency market. Because if BTC is going up, you want to be looking for longs in alts as well. Not always, but in certain situations. I think this is one of them. This is Ethereum. We're now seeing this breakdown. So let's take it down to the daily and understand why this zone is so important. Let's actually take it down to the weekly because we can see this a lot more clear. So when we're looking on the weekly, we see this huge double bottom, and then within the double bottom, we see a little double bottom. Both of those occasions, this $300 range has been a major level of significance. Now we see that we broke it at around summer of 2020, right here. Absolutely smashed through it, no hesitation, and now we got our pullback validating this major level of significance. This was the entire bear market resistance. Oops. We can see that this is the entire bear market resistance. This was the huge bull market. This is from August of 2018. We were unable to actually close above it until July of 2020. So this is a key zone that we had to break. We broke it. This is now our retest. We're getting lots of wicks to the downside, indicating lots of buy pressure still within the market, lots of demand looking to purchase this asset. And now we're seeing a consolidation, and we haven't seen this create our first impulsive push yet, but I think Ethereum is going to be the next one on the list, and definitely an asset to keep your eyes out for when BTC starts to move to the upside, gaining any level of momentum. I think Ethereum is definitely going to be jumping. So let's now take it to the 6-hour chart. Not absolutely perfect in terms of the price action, but we can see this series of lower highs. We see a high, we see a lower high, we see a lower high. And we also see a support and resistance right here. Not absolutely perfect, but this is a squeeze, and this is a key level of support. We see our first impulsive push, but we do not see it break our main level of significance in terms of the horizontal zones that we look for. So 390, around 388, somewhere around there is our major level of significance that we have to break in terms of the horizontal zones, and we have not seen it break yet, so I do not want to, let's just take out these. There we go. I do not want to act too quickly. I want to be patient. I want to wait for the perfect opportunity. And I think the perfect opportunity is when we start breaking 390. Once we start breaking 390, I think the bulls are really going to take charge. The sellers are going to get worried, freaked out. This previous high is looking very, very solid for a potential opportunity. And we also see a series of higher lows. This is a low, this is a higher low, this is a higher low, and this is a key level of resistance. So this is an ascending triangle formation, which is really bullish. You could wait for the break and retest of this previous 390 zone, or you could just be looking for a stop entry above once it starts to break out, maybe at like 405, 410, somewhere around there, and your stop loss is potentially below one of the previous lows that it makes on its way up, maybe somewhere right there with this entry right there, and then your potential take profit is around 480, 490. Pretty solid risk rewards that we could be looking at on the 4-hour time frame. So I think I will actually incorporate that trend line, so right around there. Not absolutely perfect, but I think that this strong impulsive push is very significant, breaking over the $300 range. We needed some level of correction in order to have the market breadth, in order for the market to be able to sustain itself for a long period of time. It can't go from A to B without any corrections. The market usually has some corrections that allow you to enter at better prices and continue the overall trend, re-adding to the position and really doing well with it. So this is the impulsive push. We're looking for some correction, and I think we got it. We see a series of lower highs. This is that exhaustive, explosive top, and then we get the consolidation where you can't always just look at the very top of the previous high. You have to look at the actual contraction of the price action, and I think that's exactly what we're seeing right here. This is the contraction of the price action right here. This is the blow off top. You see this is still a continuation pattern. This is the blow off top, and then you start to see the contraction, and then this is the contraction right here, the symmetrical triangle, and then this is that first impulsive push. This is another contraction, and we're getting our next impulsive push. So I think what we're going to be looking for is once it breaks 390, we're looking for a retest to validate the previous resistance as a new level of support. Once we get that validation, I think a stop entry above the previous high to get us once the momentum starts to turn to the upside would be a good opportunity for a possible entry on Ethereum. So that's going to be what we're going to be looking for on ETH paired with USDT. Let's go here. And the last thing we're going to be looking at is ChainLink, because we do really, really like ChainLink as an alt. So let's go from the weekly chart. So this is at a previous all-time high. It's pulling back to a major level of significance. We can see a lot of hesitation on the way up, and once it started moving up, it just absolutely blew through the roof. So this is going to be a new level of support at around $8. Not much more to talk about. Major level of significance all throughout here, but that's a huge gap that we won't really be talking about until if Link really takes a plunge. So we did see a very well-respected series of lower highs. Got a break. Wasn't perfect because it would be really nice to see a little bit higher of a break, because I initially had the zone a little bit like so, which actually is looking pretty decent, so I might actually leave it there. But it is a pretty mellow pullback. We'll have to look at a smaller time frame. But overall, I think seeing 1, 2, and then a little bit of a lower, something like that, and then you get the nice ascending zone rip and then break to the upside, that would be a good opportunity, where you get an initial break of a descending zone. But if you break a descending zone, it doesn't mean that you should instantly go long. There's a descending zone, and then there's usually going to be some level of consolidation. So it could be a symmetrical triangle, it could be a horizontal level of resistance and support, creating a channel, whatever it may be. It could even be a downtrend into an ascending zone, and then it melts to the upside, right? That's happened, and I used to look at ascending zones. Just if I see one, I'm always aiming down, and that's not necessarily the case, especially when you're looking at markets as a whole. Like, you're not looking at Chainlink as a complete single entity compared to every other asset in the market. You got to look at Chainlink and understand it's a risk-on asset that's very positively correlated with BTC. So then if BTC does well, Chainlink also does well, and BTC does poorly, Chainlink also does poorly. So you got to understand the correlations, and I think BTC is looking pretty good, so I think Chainlink is also looking pretty good in terms of the overall direction, and also the smaller term price action. Let's look at the 6-hour chart to get a better understanding of. Oops, let's just get rid of that. There we go. So when we are getting to a smaller chart, I do see that, which isn't ideal because we see 1, 2, and then a third validation there. But it could be breaking right now. It kind of does look like it is. Obviously, we'll have to look at the previous high and then get a level of confluence to get broken. So we're not just randomly being like, oh my god, it looks good. We're going to enter right now. You got to have a theory, and you got to be able to actually implement that every single time. So I think this previous high right here, I'm just looking for a zone that would be a very good level. This is too large of a zone, way too large of a zone. I think I'm going to go with this guy right here. It's not perfect because I would like to incorporate this support right here. But we do see a support right here, support right here, support right here, turning into a resistance, turning into a resistance. And this candle closure right here, which is also proving to be a level of significance. So we'll just drop that down to a very small level, and then we'll jump to a 1-hour time frame. And then we do see a nice little break of this zone, like so, and then we'll get the horizontal zone in there after this support. So I'd say Link looks bullish on most time frames as well. So just broke out of that zone. So I think at this point, what we're going to be looking for is a break of, if you want to be a very early potential entry, or if you'd like a potential entry that's very early, breaking this zone is very important, 10.9. So we'll look to see validation there. And I think the next potential entry is going to be break and retest of the 11.8, 11.7 high, which is this guy right here. And when you're looking back at a larger time frame, that's what you'd see is a nice tight consolidation and entry at around $11 or 11.7, and then you'll be looking for a larger time frame take profit. Just looking at the geometry of this right around there, and let's get our array. Around 25.6 would be the next potential TP for this larger breakout within ChainLink compared to USDT. So those are multiple opportunities that we'd be looking for. Hopefully you enjoyed it. It was actually only 30 minutes, so it didn't take as long as I thought, but we did try to go through a bunch of different assets and a bunch of different charts semi quickly. If you did have any questions about the content that we do post, or if you'd like to have more information on some of the stuff that we do for our students, for people who are interested in learning how to invest in trading cryptocurrencies and want to have a better understanding of how to use charts to analyze the markets, definitely give us a DM or something. We do have a premium service that offers a very structured education process that allows us to really give you every single piece of information that we have that we've been able to attain through the years of experience in the financial markets. So hopefully you enjoyed it. If you did, definitely give it a thumbs up so then we know that you enjoyed it, and then subscribe so we know that we should continue making more videos like this. So thank you very much for watching the global macro and crypto market update. Until next time, have a good one, everyone.